In Lesson 2.1, we'll be calculating employee earnings. Explain how employees are paid and calculate hourly employee earnings. Paying employees. The amount paid to an employee for every hour worked is called a wage. A fixed annual sum of money divided among equal pay periods is called a salary. A commission is a method of paying an employee based on the amount of sales the employee generates. The total amount paid by a business for an employee's work earned by a wage, salary, or commission is called total earnings. Total earnings are sometimes referred to as gross pay, gross wages, or gross earnings. A pay period is the number of days or weeks of work covered by an employee's paycheck. Examples of pay periods: every week, weekly; every 2 weeks, biweekly; twice a month, semi-monthly; once a month, monthly. The total amount earned by all employees for a pay period is called the payroll. The accounting staff position that compiles and computes payroll data and then prepares, journalizes, and posts payroll transaction is called a payroll clerk. A time clock is a device used to record the dates and times of each employee's arrivals and departures. Calculating employees' hours worked. Calculate regular hours. Calculate overtime hours. Calculate total hours. Time clock systems. Calculating hourly employee total earnings. Calculate regular earnings. So your regular hours for the pay period times your rate of pay equals your regular earnings. To calculate the overtime rate, take the regular rate, multiply it by 1.5, and that gives you your overtime rate. Then, to calculate your overtime earnings, take your overtime hours, multiply it by your overtime rate, that gives you your overtime earnings. Then to calculate your total earnings, you add the regular earnings plus the overtime earnings to get your total earnings. What is payroll? The total amount earned by all employees for a pay period. Identify 3 methods used by modern time clock systems to record employee arrival and departure times. Employees can swipe their name badges, key in personal identification numbers, or press a finger on a biometric pad to record their arrival or departure. Describe the overtime rules of the Fair Labor Standards Act. This act requires most businesses involved in interstate commerce to pay employees at least 1.5 times the normal hourly rate for hours worked in excess of 40 hours per week. How does 3 Green calculate overtime earnings? 1.5 times the normal hourly rate for hours worked more than 8 hours per day or 40 hours per week.